Good gains in Calgary, but the road ahead is long and likely filled with a lot of speed bumps. So let's get to it. It should come as no surprise for those following our market updates that we are in a market that has very different stories depending on which segment of the market you find yourself in. If you're buying or selling in the under 500 category, well then you can likely expect a fair amount of traffic and activity. But if you're trying to sell a 7-figure home, we'll be ready for a whole lot of extra time on the market. Fewer buyers and increased inventory is a back-to-back slap in the face for some of those homeowners. Now that being said, if you're in the market to buy an estate home, well, you'd be pretty hard-pressed to find a better time to get a great deal that is way below long-term market averages. Now, when we look at all product types, there's been encouraging signs of improvement thanks to nearly 10% more sales activity in this October versus the same time last year. Though it hasn't been enough to completely halt the price drops, our citywide benchmark price is just a hair below last month's and about 2% lower than October of 2018. So the bleeding hasn't completely stopped, but it does seem to be getting there. So let's quickly break down what's happening with the different product types. Overall, Detached Homes did see a slight gain in sales compared to last year, with growth in almost all districts. And thankfully, a continued trend of fewer listings means that not only did we not see the big price drops associated with the excess competition, it means we're now in balanced territory with only around 4 months of inventory. Now, it's not time to celebrate yet, as awesome as that is, as we are still nearly 20% below long-term sales trends, and this balanced situation is as much to do with less inventory as it is to do with improving market conditions. But good news is good news regardless. Now, over in the attached market, we are continuing to see the largest increase in sales, with year-to-date growth of nearly 7%, and improvements occurred across almost all districts, with the notable exceptions being the northwest and northeast sections. Following the same trend as Detached Homes, an easing of new listings, which were down almost about 8% this year, has really started to put a dent in our oversupply issue. Now, sadly, even with these trends, our oversupply continues to put downward pressure on the pricing across nearly all districts, and we're well below previous highs. Now, over in the apartment district, sales continue to improve this month as new listings eased. This has helped reduce inventory levels and brought the months of supply down to just under 6 months. Now, despite improvements in the market, it's still firmly in buyer's territory here, so absolutely a great buy if you're in that market. Overall, year-to-date prices remained about 2% lower than last year's level and nearly 17% lower than peak pricing. However, there are some signs of stabilization in prices this year. So let's check out the numbers. So what's the bottom line? Well, things are looking up, and we have increased sales activity, inventory levels are on the decline, and there's signs of optimism in the starter and move-up market. But until we get the estate market back on track, our progress will always be mired by their struggles. If you've made it this far, please be sure to leave a like and comment, as it really helps get this information out to the public. We're going to continue bringing these updates to you once per month to make sure you are always in the know. So thank you very much for watching, and I hope you have an awesome rest of your day.